Welcome to the deep dive. Today, we're really jumping into the deep end, the pure play quantum computing sector.
Yeah, the absolute frontier.
We've got a stack of source data here on the three most active stocks from the screener, RGTI, QBTS, and QUBT. Our mission: cut through that hype and show you what really happens when, market momentum crashes into traditional finance.
It's definitely an environment of extremes. I mean, these aren't your typical high growth plays. These companies, they're valued almost entirely on future promise, not what they're earning right now.
Right.
So we're going to do a forensic review of this data, pull out the key bits on fundamentals, technicals, valuation news, the whole picture.
Okay, sounds good. And we'll even run some paper money math just for fun, for perspective. But first, we absolutely have to say this up front.
Yes, the necessary bit.
This analysis is purely for informational and educational purposes. That's it. We're looking at published data. This isn't investment advice, definitely not a recommendation to buy or sell anything. Just want to be crystal clear on that.
Agreed. So think of this as a look at the quantum race. Let's kick things off with the current leader, at least by market cap, and arguably momentum. Rigetti Computing, that's ticker RGTI.
RGTI. Okay, trading around $43.91. Market cap is huge, $14.23 billion. But let's look at these foundational numbers because, wow, the price to sales ratio, it's 1797.23.
Astronomical.
Yeah, and that's because their total sales over the whole last year were just $7.92 million. You're basically buying pure hope here.
That PS ratio, it's kind of the perfect snapshot for this whole sector, isn't it? And what's maybe even more interesting is this analyst disconnect.
Go on.
Well, the consensus rating is super bullish. It's a 1.12, which is basically a strong buy. But their average target price, 25 to 86 cents.
Wait, 25.86, but it's trading at nearly $44.
Exactly. Significantly below the current price.
So are the analysts totally missing something here? Or is the market just, in full-on speculative mania mode, way ahead of fundamentals? What's the read?
I think it's probably a bit of both, honestly. The analysts are likely stuck on older models that just, well, they don't capture this kind of potential. But Rigetti does have something crucial going for it. Cash.
Ah, the balance sheet.
Yeah, their liquidity looks surprisingly strong. Quick ratio is 41.57, and debt to equity, practically zero, 0.01.
Okay, so that's the cushion then. They've got enough cash to cover liabilities more than 40 times over, with no debt. That buys them time, right? Because these loss numbers are huge.
Colossal is the word. They are burning cash like crazy to scale up. Profit margin is negative 2,079%. Operating margin, negative 976%.
Ooh.
Yeah, they're deep in R&D, build-out mode, full speed ahead.
But clearly, investors are looking past the margins, straight at momentum, and the price action. It's been absolutely explosive. Rigetti's yearly performance, get this, plus 5,770%.
Mind-bending.
Just in the last week, it gained over 47%.
That screams intense rally. And the technicals back it up. The stock's trading above its 52-week high. It's way, way above its 200-day moving average, plus 219%. Classic momentum buy signals.
But there's always a but, isn't there?
Always. For you, the learner, the caution light is flashing bright red here. The 14-day RSI, Relative Strength Index, is at 88.97.
That's really high.
Extremely high. Anything near 90 means it's severely overbought, very vulnerable to a sharp pullback. And the beta is 1.60, so expect volatility.
Okay, so high risk, high momentum. Now, those returns must have been fueled by something concrete, right? News?
Yeah, there's been some positive news flow. Rigetti recently got about $5.7 million in orders for their Novera quantum systems. That came after a $5.8 million Air Force contract in September, so signs of commercial traction.
That helps justify the rally a bit, gives it some substance. Okay, let's pause here and do that paper money math. Just imagine putting a hypothetical $5,000 into RGTI when it was at its 52-week low. Think 73 cents.
Right, so $5,000 at 73 cents gets you, let's see, 6,849 shares.
And at the recent close of $43.91.
Those 6,849 shares would be worth $300,758.59.
Wow. That's a paper profit of over $295,000. Roughly 5,900% gain. Unreal.
Shows you the power of that momentum, even if it's on paper.
Absolutely. Okay, let's shift gears to the next contender in this quantum race. D-Wave Quantum Inc. Ticker QBTS. They're pretty much neck and neck with Rigetti right now, trading at 35.72 cents, market cap $12.22 billion.
Yeah, very close. And QBTS still has those sky-high valuation metrics too. PS ratio is 548. But D-Wave offers a really interesting contrast to Rigetti, especially on costs.
How so?
While analysts are even more bullish on D-Wave, it's got a perfect 1.00 strong buy rating. But again, that target price paradox. The average target is $23.30, way below the current price. The market thinks it's worth almost 50% more than the analysts do.
Okay, but you mentioned costs. What's different there?
This is the standout number for D-Wave, gross margin. It's 82.46%.
82%. That's huge, especially compared to Rigetti's negative margins. What does that tell you?
It suggests D-Wave is actually quite efficient at, selling and delivering its core offering, probably access to its quantum annealing systems. The cost of goods sold is low relative to revenue.
Okay, that sounds great, but
But here's the paradox. Despite that great gross margin, their overall operating costs, R&D, admin, just scaling the business, are still massive. So operating margin is negative 353%, profit margin negative 1,263%.
so they're good at making money on the initial sale, but the cost of just being a quantum computing company is eating up all those profits and then some.
Precisely. But like Rigetti, they also have that strong cash buffer. Current ratio of 42.99, quick ratio of 42.86, low debt too.
Got it. Safety net in place and momentum.
This is compelling. Performance year over year, up 784% last week, up over 44%. Sales growth quarter over quarter was strong too, nearly 42% up.
And the technicals are showing that velocity.
Yep. High relative volume, 1.91, shows lots of interest. The price is bumping right up against its 52-week high.
But the same warning applies, I assume. Overbought.
You got it.
Yeah.
RSI is 81.69, still firmly in that overbought danger zone. What seems to be driving D-Wave, though, is maybe a stronger focus on the application story.
Ah, practical uses.
Exactly. Recent news highlighted a project with the North Wales Police using quantum to optimize police car placement. That kind of thing shifts the story from abstract future tech to, real-world utility right now. Investors tend to love that.
Makes sense. Okay, paper money time for D-Wave. Hypothetical $5,000 invested at their 52-week low, which was 0.87.
Okay, $5,000 divided by 87 cents, that gets you 5,747 shares.
And at the last close of $35.72.
Those shares are now worth $205,258.84. So paper profit over $200,000, almost a 4,000% gain.
Still incredible returns. All right, let's round out our trio. Quantum Computing Inc., ticker QUBT. This one's the smallest of the three, market cap $4.11 billion, closed at 22.9 value once.
And QUBT, well, it takes the cake for extreme valuation. It's PS ratio. Are you ready for this?
Lay it on me.
15,819.46.
15,000.
Yep. Based on minuscule trailing sales of just $260,000, Rigetti's 1,700 ratio was shocking. But this is a whole different universe. Shows you just how little revenue matters to the current market cap.
So what does matter for QB2?
Capital. QBT's story seems to be almost entirely about raising money, and the data shows it. They actually have the highest liquidity of the three. Quick ratio is 88.08, double its peers.
So they're absolutely swimming in cash.
They need to be.
Yeah.
Because their fundamentals are the most volatile and deeply negative of the group. Gross margin is negative 1378%. Profit margin, negative 29,000%.
Wow. Okay, so the burn rate must be astronomical, which explains the news flow, I guess.
Exactly. The recent news is all about capital raises. Huge ones. Early October, they announced a $750 million private placement that followed a $500 million one in late September.
They're just aggressively injecting cash to fuel the operation and presumably the stock price.
And that strategy leads directly to insane volatility. QBT's beta is 3.83.
3.8.
Yeah. If the broad market moves 1%, QUBT tends to move almost 4%. Highly unpredictable, tied directly to those financing announcements. Performance is still up over 3,200% for the year, but the swings day to day must be brutal.
Oh, and insider ownership is highest here too, almost 19%.
Interesting. Okay, final paper money math. That hypothetical $5,000, if it went into QUBT at its 52-week low of 65 cents.
Let's see, $5,000 divided by $1.65 is 7,692 shares.
And at the recent $22.01.
Close. That stake is valued at $169,300.92. So a paper profit over $164,000, about a 286% gain. Still massive.
Okay, so let's pull back and look at the big picture across all three, RGTI, QBTS, QUBT. The pattern is pretty clear, isn't it?
Undeniable. We're looking at extreme speculative growth.
Right. Massive annual returns, huge cash reserves, those high quick ratios we talked about. But that liquidity is absolutely vital because the operational cash burn is just, well, catastrophic right now.
And that financial paradox, that's the key takeaway for you, the learner. You've got these multi-billion-dollar market caps floating on almost no revenue and incredibly negative profits.
Yeah. This valuation is essentially being bankrolled by aggressive capital raising, like with QUBT, and just sheer investor optimism about the future. It's the absolute definition of a sector where momentum has completely steamrolled traditional valuation.
A high-risk, potentially extreme reward game built entirely on what might happen years down the road. But okay, as you think about this explosive growth, these valuations that seem disconnected from reality, here's a final provocative thought for you.
Ah, the parting question.
Insider trading data. Across all three of these stocks, it shows pretty significant selling by insiders in September and October. So, in a sector going parabolic like this, does that heavy insider selling just mean smart people are taking some profits off the table? Prudent diversification? Or could it be a hint, a signal from those closest to the tech that maybe, just maybe, the short-term rally is getting a bit overheated?
That's definitely something to mull over. Profit taking or a warning sign?
Exactly. Food for thought. That wraps up our deep dive for today.